What's up, Crypto Knights? I am back with another live stream here for you. And as you can tell by the title, or if you haven't already figured out, it is the end of the world. It is the end of the crypto universe. All times are coming to an end. Of course, that's not true, and we're going to talk about that. But let's let a few people get on the live stream here and see who we got. If you can see me, or if you can hear me, then go ahead and let me know where you're watching from, where you're at today. I typically don't do live streams at this time of the night, but hopefully I will catch some people that are in America, in the States, watching at a different time. It's the morning time for you guys, and I know, the Dow Jones is opening up in a pretty interesting place here today, but we're going to talk about that and a whole lot more on this live stream. I'm going to answer a bunch of questions, but I just wanted to come on here because I know that, there's a lot of panic. There is a lot of people that are new to the markets that are experiencing this for the first time. And, actually many of us that have even been around in the markets for a while probably haven't experienced this before. I've been in this game since 2011, so I've actually seen a correction this bad before. And at that time, I had a lot less faith in the markets than I do today. And again, I'll talk about that a little bit more. We'll dive into that, but I want to give some people some time to get on here and to let me know where you're calling from. All right, I think it's sharing okay now. We've got Jennifer coming from Orlando, Florida. What's up, Jennifer? Good to see you. Who else is on here? Atlanta. All right. So it's true. We are getting some Americans now streaming at this time. Usually I stream in the morning here. I live in Bangkok, so that's typically the nighttime for people in America. And usually don't get as many Americans on those streams. But good to see you. Who else do we got on here? Where are you watching from? All right, Sydney, Amy, I will see you there. We are coming for the Keys to Freedom live conference, April 7th and 8th. In Sydney, Australia. It'll be my first time. I'm very excited to come out there. I am drinking here to the markets. We'll talk about whether I'm drinking for celebration or for the state of, sorrow of the markets. We got someone in Belgium here. What's up, Terry? I think that's how you pronounce your name. Good to see you as well. Jacqueline. Nice to see you. I just saw you in Phuket, and you are in Bangkok having a foot massage while watching me. Well, you're off to a better start to your night than I am, I would say. All right, Houston, Derrick, what's up, man? Costa, tuning in from Cambodia, no panic at all. Awesome. We'll talk about that a little bit more. What's up, Aki, Pakistan back, London. Jason, Black Ops member from Virginia Beach, VA. Awesome, awesome, awesome. Bart, what's up, man? We are going to have some fun in Pattaya, a little yacht party in a couple of days. We'll talk about that a bit more. But yeah, awesome. We got a lot of you on here. Oh, Sydney. Yeah, it's getting pretty late in Sydney. What time is it there now? I'm surprised you're even awake. But yeah, guys, we've got a lot of you on the stream. Very excited to see you. As you can see, here we've got quite a correction. We can call it a crash. I think that using the word crash is proper at this point. We are at sub 7K Bitcoin. We are at a total market cap of $321 billion. But we did hit a low today of, I think, $282 billion was what I saw. Let's look here. Oh, we actually went to $276 billion for a brief moment there. So we are far, far off from the highs that we saw back at the start of the year here. January 8th, we were sitting in the $830 billion range. We did briefly touch an $850 billion market cap. So we are far, far, far from where we were at. And the interesting thing is we're also starting to see, the Bitcoin dominance level go a little bit higher. Still not quite back to where it was, back in the summer of this year. Or past year, I should say, when the market cap was 50+%, sometimes getting as high as 60% Bitcoin volume. Okay, but we're going to talk about all this. What does it mean here? what's going on, why is this giant correction or crash or whatever you want to call it happening. Hold on, we got a lot of comments here. Melbourne, what's up? Hey, Sammy, what's up? Rainchester, UK. I think that's the appropriate name for it for sure. Sydney is 12:30 a.m. What's up, Kevin? I just got back to Bangkok the other day. I think I'm going to set up a little cryptocurrency meetup at my hostel again this upcoming week. So I will give you all the details about that. What's up, Richard? Sydney, Daniel as well. Adelaide. Woohoo, lots of Australians. All right, Bulgaria in the house. Awesome. All right, what's up, Ryan? My name is not David, but unless you're saying hi, David, to somebody else, close enough. But all right, we got a lot of you on the stream, so let's talk about what's going on here. Well, Dave's watching me live from Soy Cowboy, apparently. I'm not sure that's the best use of your Soy Cowboy time, but, I wouldn't know. I don't do those kind of things. But, so, yeah, guys, let's talk about what's going on here, okay? Now, we see a whole lot of panic online. I've seen a whole lot of panic on the Cryptocurrency for Beginners, on this Facebook group, on lots of other Facebook groups, on, all over Twitter, all over social media, all over those kind of things. Now, first, if you're new to markets, let's just get this out of the way and do a little summary, okay? All markets have boom and burst cycles, okay? There is nothing in life, no market, no magical, mythical, unicorn market that you can find that just goes straight up and up and up and up and, we all make lots of money and we're all happy. No, that's not how it works, okay? Markets are a constant tug of war, right? There's bear markets and there's bull markets, okay? And what that basically means comes down to human psychology. So our psychology is typically running the markets. And you notice it very, very strongly, very powerfully in these bear market cycles like this, because usually as humans, we tend to notice when we're in pain more than when we're happy or when we're having pleasure, right? Like most people are what we call running away from people or moving away from people. I think they say like 80% of people are more focused on moving away from pain than they are from moving towards pleasure, okay? So only like 20% of the people that are out there focus more on moving towards pleasure than moving away from pain. Okay, so we like stability in general. Most people are more into stability and comfort than I guess freedom or adventure, those kind of traits. So that's just kind of like a little psychology tidbit. And you can see that in the markets, okay? When we have bear markets like this, people get these overwhelming emotions where they're in pain, right? And they need to get away from this pain. And the unfortunate thing about this is why, I'm constantly making videos, why I did an entire video in the Cryptocurrency for Beginners course that was 50 plus minutes long, talking all about emotions and emotional mastery and having a plan being the essential components of succeeding in the markets in the long term. And right now, days like today are where you get to show if you've got that emotional mastery and if you made a plan and if you're actually capable of sticking to it, okay? So with the bear market, which is what we're in right now, okay, it's very clear if you look at where the charts have gone, how quickly the enthusiasm has faded, how quickly, the Doomsday Talk has come, and, why I named this, this live stream, It's the End of the World as We Know It. That's just kind of a joke, right? But it's playing off this idea, which is that people do actually get caught up in these extreme swings of emotions, okay? And it's dangerous on both sides. So right now we're talking about the bear market, okay? But you would have noticed if you've been watching this channel, if you've been watching the content that Keys to Freedom puts out, if you've been watching Diggy's YouTube or, reading anything that Mitch, Diggy, and myself post, we were very consistently telling everybody that, during the last 2 months when we've had this crazy bull run, make sure you lock in your profits, make sure you take your profits, make sure you understand this kind of irrationality can't last forever. And what we saw the last couple of months was irrational, okay? We saw these market caps, and especially some of these altcoins, right? And we saw these altcoins that have, basically no product. They're just a white paper, right? Like, let's look at Tron, for example. We saw, if you would have looked at the Cryptocurrency for Beginners Facebook page, a month ago, all you would have seen is all these Tron spam posts, right? And I was deleting them left and right and left and right. But, everybody wanted to talk about Tron. Tron was the next big thing. Tron was taking over the world. But if you notice, like, Tron didn't actually have any sort of product, as far as I can tell. They haven't actually released anything. So it was all irrational hype, right? And this was the entire market. So look at this, guys. We saw Tron at its peak have a $17 billion market cap, right? I think it may have even gone higher than that, if I remember correctly. No, I think that was the peak. Okay, so a $17 billion market cap on January 5th, and that was from, a $340 million market cap. Actually, if you go back a month prior to January 5th, you were sitting at a $140 billion market cap, right? So that market cap basically 10x in a month off of what? Okay, off of what? Now this is where this goes two ways, okay? Just as this market can go irrationally high very quickly, it can also go irrationally low very quickly. And right now we're experiencing the opposite side of that, okay? So there's a couple things at play here, and a couple of really positive benefits that I think are going to come from this experience, okay? Unfortunately, the reality is a lot of times you've got to do stupid things and lose money or just delay possible earnings, possible profits in order to think rationally and have a plan when you're investing. Unfortunately, people do get caught up in this hype. And what you're going to see now, okay, or at least what I'm hoping that we're going to see, is a return to a market where people are actually taking the time to research projects, actually investing based off of fundamentals, and not just buying into the hype of every coin that is, going up and up and up and up, or, that's just going to go to the moon because everybody says it is, okay? That was irrational, and we were seeing a mass hysteria, if you will, in the markets over the past couple of months. And right now, guys, the thing about it is we're seeing a mass panic on the other end, okay? This kind of correction, this massive sell-off, this massive crash that we've experienced is just as irrational, in my opinion, as the $850 billion market cap we were sitting at the peak. Okay, and just to go a little, I guess, clearer on that, let's actually look at the market cap and where we are. Okay, and where we've been. Okay, because when you look at it from just a day-to-day basis, or if you look at just where we are today, right, obviously this looks really bad. But if we just go back only 3 months, okay, look at where we were on November 6th, which is, 3 months ago. On November 6th, 3 months ago, we were still under a $200 billion market cap, okay? So we are basically $126 billion higher than we were 3 months ago, which is a pretty good return in a market of this size. But let's go even further than that, okay? Because the first time that we actually crossed the $300 billion market cap was the end of November, I believe. Yeah, right at the end of November. So let's just call it the beginning of December, just to make it easy on us. So basically, guys, we are at a market cap level right now where we were 2 months ago, and that was after a huge run up. If we go back on a year, okay, let's go back on a year basis. So in the real run up really started, I guess, about, I would say, yeah, let's start here around October, right? We were in the $100 billion market around August, and we kind of steadily worked our way up. But we had a really big run up starting just in November. Okay, guys, so we've seen this crazy run up in the past couple of months, and we've seen a huge sell-off. Okay, let's not mistake that. We have seen a huge sell-off. Okay, but that huge sell-off is both healthy and necessary. Okay, it's something that had to happen, and the reason this has to happen is because there's a lot of irrational money in the markets, and markets are designed to take resources from people that have a lack of education and information and a lack of control of their patients, emotions, and strategy, and move that money, funnel that money to the people that have the most knowledge, the most strategy, the most control of themselves, of their emotions, of what they're doing in the markets. Okay, so that's what's happening here, as it always happens. And this is why you hear that 90% of all traders will lose. This is exactly why. You're seeing it right in front of your own eyes today. You're seeing how people are panicking, how irrational, how emotional everyone's getting. And I get it, guys. Trust me. I still feel that the kick in my gut. It doesn't feel good to see this happen. But I've been here and I've done this, and I know that this is part of the way these things work, okay? So this is another reason why I always hammer home, and why we at Keys to Freedom always hammer home: never invest more than you can afford to lose, and think long term, okay? Because when you are in situations like today, that means you can sit on it. As difficult as it is, as much as you may be saying like, oh, I got to sell now before I lose everything, you can take a deep breath, go meditate, go outside, go spend some time with your friends, drink a couple beers. I'm drinking this Japanese soju mix over here. So cheers to that. But yeah, go do something else, right? And come back to it, okay? Because what the reality is you actually don't realize a loss, right? Like, you don't lose your money for certain until you sell, okay? Now, again, this is not financial advice. I'm not here to tell you what to do with your money. I'm not here to say hodl until death or anything like that. But, there is something to be said for the fact that you don't lose until you realize that loss. And LaKendrick, I'm going to jump to your comment right there, because you're 100% right. You have to go against your mentality. We've got a 7 million year old brain, and our brain is designed to make us move rapidly and violently away from anything that makes us uncomfortable. Because to our 7 million year old brain, the things that made us uncomfortable back then would actually kill us, right? Like, we'd be running from tigers and all kinds of other shit, right? We'd actually be in danger. The thing about it is, our world is not like that anymore. Most of the things that we're scared of, that we run from, or that control us, actually don't really impact us at all. But we can't shake that feeling of our 7 million year old brain. Okay, so you're right, LaKendrick. This is about fighting against your mentality. This is about bringing awareness to the fact that we're not acting rationally in markets. Okay, so thanks for pointing that out, and that's exactly what I'm talking about. Now, to talk a little bit about, Jason says market cycle bottom, hodl. Personally, I do think we are at the bottom, or very, very close to the bottom. We've had an incredible retracement on some of these different cryptocurrencies. It's actually, I did see a correction coming, but I would not say I saw it hitting this hard. Personally, I thought Bitcoin would stop at about 8K, but this is okay. We're in the 61.8% Fibonacci retracement line. This is where it was going to come back to if you were reading the charts. Okay, and the reason why that's important and why that's good is now we have a lot of room to grow. Okay. Now, what markets do is they shake out weak hands. You've heard people talk about this. You've heard the term weak hands before. Now, a lot of the weak hands, okay, are these people that were just investing or buying crypto for the first time in the past month or so, when it was at all-time highs, when it was all over the news, when all you heard about was crypto, when your friends and family that have never been interested in it before were asking you about crypto and begging you to teach them how to do it, that's when most of the weak hands were buying, okay? And we call them weak hands because they're just that, right? They don't know, typically they don't know what they're investing in or don't believe what they're investing in. They're just in it for the quick gains, or, because of the hype, they get sucked into it. And then because they don't have that foundational understanding of what they're investing in, or they don't have that emotional mastery, that control, and that strategy, they're going to, as soon as trouble shows up, they're gonna sell, right? And typically these are the people that buy high, sell low, right? And that's obviously the opposite of what you want to do. So why is this happening? Okay, and this is something I want to go into, and I want to talk a little bit more about for you guys. I'm probably going to do maybe like a half an hour or an hour long stream from this point. So let me just make sure we've got a lot of people in the group here that are, sorry, in the Black Ops group that are still trying to get into cryptocurrency for beginners. So I'll get you guys in there right now. Okay, hold on a minute. So yeah, anyways, guys, what I want to talk about is why this is happening. And there's a lot of ideas. There's a lot of different, kind of theories, or maybe, different conspiracy theories, or whatever you want to call it. But there is a lot of stuff going on at one time right now, and personally I don't believe in coincidences at all, especially not when a lot of things happen at the same time. So there are a lot of forces at play and a lot of reasons why I believe this is happening right now, and we're going to go over a few of those, okay? But let me start by, I guess we can kind of start by addressing a few of the different reasons why the correction or crash, or whatever you want to call it, the great bleeding of January and February 2018, why it started, what it's all about. So we pretty much saw this start kicking off again with the Korea FUD, and as far as I can remember, when this particular correction really started was because they removed the Korean exchanges from the coin market cap total, okay? And that is something that we saw happen. And it did start to get the corrections beginning. So give me 1 second. I'm letting a few more people into the group that have added at this moment. Okay, there we go. Good. Cool. Okay, guys, so we saw it started off with that, and, it carried on from that point forward. And, yeah, we got a few more people coming in. Guys, you can ask some questions as well. I will answer some questions on this after I go ahead and let a few more people in and summarize this. Okay. Okay, so cool, guys. Sorry for that little brief delay there. Okay, but here we go. So with this, there's a lot of play at once, okay? And this is why I believe there is some heavy manipulation going on. Again, I've prefaced this or pre-framed this with saying I don't believe in coincidences for a reason, okay? All of this started happening at once. You have news stories coming from Korea, from China. You have the banks banning credit card transactions. You have the Ponzi schemes being shut down. You have a lot of information about various countries. I think there's also some India FUD coming out. You have basically all of this coming at one time, okay? And this is a coordinated effort. And here's what's happening behind the scenes, which is what you may or may not know about, is that all of the major financial institutions, all of the institutional investors are preparing to go all in on crypto, okay? Or, I guess maybe using the word all in is not appropriate, but they're moving into the markets and they're going to move in heavily, okay? So that's happening behind the scenes and nobody is really talking about that. But if if you know how banks work, if you know how these different, hedge funds and banks and all of them operate, well, then you know that they are the ones playing the game behind the scenes, and they're basically kind of controlling our access to financial instruments, or have been for a long time, okay? But now you also have an interesting situation happening, which is we are seeing that Goldman Sachs is preparing to launch a cryptocurrency trading desk. We've seen this story come out. This is happening behind the scenes with many different financial institutions, and it's starting to spread. So we have seen the introduction of futures, right? Now, futures are different because futures are paper settled. They're paper contracts, and there's no actual crypto, like real crypto, being stored or sold to the customers. There's just a contract for difference, what we call a CFD or a future. And so that has not really impacted the market in too big of a way, though I do think the futures, looking at it, have had an impact on the price. And this recent crash, we don't have enough information yet to say for certain because all of this has happened at the same time. But what we can say is with the custodial service, this is quite different. This means these financial institutions, these big, huge banks and hedge funds, are actually going to be getting into the business of cryptocurrency for real. That means they are going to be holding and storing and selling real cryptocurrency to their clients, to their customers, okay? And that means, that we are going to experience a very different kind of market moving forward. Now, the reason I bring that up is because if these guys are moving into this, there's no way they were going to buy at 20K, right? We know that there is large-scale manipulation in the financial markets in every single aspect, from bonds to stocks to the real estate market to even student loans. There's mass manipulation and fraud on all levels. So it's not too big of a stretch to imagine that these guys that have been doing this for quite a long time would crash these markets, bring them down as low as they possibly can, which I think we've pretty much hit the bottom as far as where we're going to go. They're going to bring them down as low as they possibly can. Then they're going to buy up the Bitcoin. Then they're going to buy up the Ethereum. Then they're going to buy up everything that they want to buy up, and they're going to buy it in massive amounts, okay? And then all of the weak hands that sold at the bottom here, they're going to be buying at the top once again. Only this time they're going to be buying at like 30K, and they're going to be buying from Goldman Sachs, who bought it at 6K. You get what I'm saying here? So this is what's going on behind the scenes. And this is what really you need to be paying attention to, not the panic that's going on in the retail investors or the uneducated masses that don't even really understand what cryptocurrency is all about, okay? Because you're going to see all kinds of news stories, as we always do, calling the bubble burst and Bitcoin's dead and it's all over and the dream has died and all that kind of stuff, right? But that's not reality. Let me catch up with a few comments here and then I'll carry on. Bought some more EOS today at $6. Yeah, that's a deal. Long Beach, California in the house. John, yes, for us newbies that are stuck around, we are smarter and more educated and now can really start to move towards freedom regardless of what we lost because we are still here. John, that's really important, okay? I don't believe you're actually an investor or you really understand anything about the markets until you've lived through at least one of these cycles, okay? So you can now say that you're in the game for real, you're still here. You got to see an incredible bull run over the past couple of months, and now you're seeing the other side of that very rapidly, okay? And hopefully this is not a long and extended bear market. And I actually want to touch on that briefly, because we've heard a lot of people, or you may have heard a lot of people talk about how this is the worst crash in the cryptocurrency market since the Mt. Gox crash or correction, if you will, which looks so funny going back on these timelines here, because look at how small this market cap is, guys, which is another thing to just let you know, really keep perspective of where we are, okay? At this time last year, guys, at this time last year, February 7th of last year, our entire market cap was under $20 billion, okay? So let's just keep that in perspective and zoom out, right? Zoom out and think big picture. Don't get so emotionally attached, because I think, where we're going to be a year from today is going to be absolutely astounding and amazing to many people that were panicking today, or maybe, giving up on the idea of a decentralized future, the idea of cryptocurrencies, the idea of blockchain, of financial freedom and control of our wealth for the first time in human history. Okay, that dream is still here. That technology is still here right now, today, being used by millions of people around the world that want to change this world and make this world better. And because of that one reason, no matter what the markets are doing today or on a day-to-day basis, this is going to continue to grow. This is going to be everywhere. This is the future, okay? So those are important things to keep in mind. It's important to keep perspective. But going back to the Mt. Gox situation, right? So back then, basically, we had the market cap drop from about 15 billion down to I want to say 6. And basically, guys, we had a whole year. You can see as I'm scrolling along here, we had a whole year basically of just not a lot of movement, okay? The markets were between 5 billion and 10 billion for basically a year, okay? And a lot of people are saying, oh, we might be experiencing that again. We might be ready to, have a year-long bull market, or sorry, a year-long bear market or something along those lines. And I highly reject that idea. I think there's very little possibility of that. And here's the reason why, guys. When this happened back then, look at how small the market cap was, okay? It was $12 billion. And when the Mt. Gox collapse happened, Mt. Gox at that time was 85% of the market cap, 85% of the value of the Bitcoin market of all traded cryptocurrency was traded on Mt. Gox, okay? So when that exchange was hacked or, whatever actually happened, most of the value, most of the market cap evaporated. And there's another reason why that's really important. Again, there was basically no development in the market, okay? It was all speculation. Back then, there was no Ethereum. There were no ICOs. There were no decentralized applications. Bitcoin was the only application. And there was no interest from institutional investors. There was no VCs investing in building companies. There was no real understanding by the vast majority of the world what the blockchain was and why it's valuable. And I would say we're still a long ways away from, getting the whole world to understand. We're still very, very early on, and that's why we have so many great opportunities. But we are in a much more well-established market now with a lot of money coming in and a lot of institutional interest, a lot of interest from venture capitalists, from hedge funds, from people that want to see this technology succeed. And actually, we have most of the big corporations in the world and banks and governments working on blockchain applications in some aspect. Okay, so for that reason, I think it's impossible for us to see the same type of extended long bear market that we saw before. just for that sole reason. Okay, people are excited about the technology. They're excited about the possibilities of decentralized ledgers of the blockchain and of how this can change the world for the better. So I don't see any chance of an extended bear market. I just want to throw that out there. Of course, anything can happen in the world of investing. You should prepare for everything, but I don't see the possibility of this. John says further, he says, and for those that said when we got in around November, December, I wish I got in earlier. Well, here's your second chance for being patient, running towards pleasure through the pain. Love it, John. And that's actually, my personal strategy. Again, guys, you need to do whatever you feel is right. I'm not here to tell you to buy or sell or whatever. But my strategy in these times, this is when I get excited because I know how markets work, okay? This is when I get a chance to buy everything on sale, okay? So I don't sell. People will panic and they'll sell at a loss or they'll sell when they're down. I do the opposite. And typically you want to be a contrarian in the markets. You want to, you want to do the opposite of what most people are doing. Okay. And that's usually most times going to allow you to win in the market because like we just were talking about, most people are acting out of emotions, out of fear or out of FOMO, which is, the opposite of the fear, greed, if you will. So you don't want to act out of fear and you don't want to act out of greed. You want to act with a rational, well-balanced strategy. Okay. So that's all that kind of thing. Yeah. So just getting a few more people in here that haven't gotten in yet. Okay, cool. So let me look at a few more comments and then I'll continue on about that. Hi, guys. Hi, Emily. Emily, I didn't like losing all that I did, but again, took your advice not to lose more than I can afford. On the upside, it can only get better, so hodl. Emily, an important thing, and I don't know if you were watching at the beginning of the stream, but I kind of covered it. You actually, we actually haven't lost anything. That's an important thing to keep in mind, okay? You still have the same amount of crypto that you had before this all started. So temporarily, the value of the crypto that you're holding has changed, okay? It has gone down significantly. Mine has definitely gone down significantly, but it can also go up significantly, okay? So it's important to understand that we haven't actually lost anything until we make that decision to sell. So that's kind of why we have the HODL army and we joke about all this kind of stuff. It's for that specific reason, okay? We don't want you or anyone to to make irrational decisions and let me know if you see me. Anybody? Did it come back for you guys? It should come back now. Basil saying stream down. Let's see if it came back. let me know. Still waiting. When I see that it's come back, I'll go back into what I was talking about, but I'm not certain that it's there quite yet. Let me see. I will try to stream it here on my own screen and see what I can see and hear, if I can hear myself. I think everything's working all right. Can you hear me? Yeah, okay. Cool, we're back. All right, awesome. Yeah, I know most of the comments are covering my face. Let me go down to where we were at. Ian asked, do we hodl on TRX and ADA? I'm not going to answer any questions about specific tokens. I can't tell you what to buy or sell. That's up to you. I would say when you buy something, you should you should invest because you believe in what you're investing in. And if you believe in what you're investing in, then you should ask yourself the question if anything fundamental about the project has changed. Is there a reason why you no longer believe in your investment? And make your own decision based off of that. Jay says, now it's governments we run from. Lol. Will, should we buy? Make up your own mind on that, Will. I would say we are in a pretty amazing position as far as how much of a massive correction we've seen. And, Bitcoin was 20K a month ago, and it's 7K right now. So I can tell you that I have been buying, and I'm very excited about the opportunities that I've had to be able to buy at these levels. I can definitely tell you I'm excited about that. Proc says that dip though. Yeah, this is a proper dip, my friend. It is one for the record books and one we will remember for years. Sammy, KTF family growing. Indeed we are. And I just want to say that it was very amazing to see everyone inside the Keys to Freedom Telegram groups today. It was very different with the mentality and the attitude of people inside our Telegram groups versus, the panic that you'll see a lot of places online today, and how everybody's just kind of losing their mind. And I think that just goes to show that we have a lot of really smart people, intelligent people, a lot of people on the stream, that understand what's going on and are taking some time to think, taking some time to research, figure out what's going on, and not just making emotional split decisions. Okay, and that's very important. So much China FUD too. Absolutely, Sammy. And again, like I was saying just briefly before, this is not a coincidence, in my opinion, that all of this is happening at once. These are the governments and the banks taking an opportunity to kind of make the markets lose faith a little, because you want to follow the money, right? You will see that if you look behind the curtain, if you will, you'll see that all of these banks and the governments, in fact, and other large institutions, corporations, are actually moving into this space very strongly and very quickly. Okay, so very important to know. Bart says, knowledge bombs, drop it. That's right. Got to have these knowledge bombs. Thanks, Bart. Sammy, yeah, I saw that on Palm Beach research about Goldman Sachs. Yeah, I do believe that they covered that on Palm Beach. Costa, do you think that once the market bounces back, we will see the same shitcoins gain their value again, or do you think that the market will finally mature into a qualitative market? I think probably somewhere in the middle. I would like to say that this will make people smarter investors, but the reality is, Costa, as I'm sure you've heard and there's a sucker born every day. And as the hype gets going again and we start moving up into a crazy bull market, and people are feeling those FOMO calls again. And I know this is taking over my screen here, so I'll hide that comment for a second, Costa. You're burying my face with your novel, man. But no, I think we will see new people, new money, and dumb money, as we call it, come into the market again. So unfortunately, I think people don't typically learn their lessons until they make bad decisions with their money, and and that's just kind of how it goes. So I would like to think that this will weed out a lot of the people that were not really investors, were not taking this seriously, were not taking the time to do research and to understand what it was that they were putting their money and time and effort and energy into. But I can't say with any certainty that that's actually going to happen. Tron, Tallahassee, Florida here. Based on your expertise with TA, do you think it may dip again, or have we missed the boat on buying Bitcoin below 6K? I do not believe it's going to go again below 6K again. I think we are probably going to see some stability around these levels here that are quite low, around this like 7K level for Bitcoin. Maybe trade sideways here for a day or two. I think it also kind of depends upon a hearing that is about to go live in about 50 minutes with the SEC and CFTC. And I'll talk about that more briefly in just a little bit. I actually will have to cut this live stream so that I can go stream that live in 50 minutes. But yeah, I think we probably missed the boat. But again, I want to another thing I want to stress is people are always worried about catching the bottom. Like, you got to sell at the top, buy back at the bottom, all this kind of stuff. The reality is we can do technical analysis, we can take educated guesses, but ultimately that's what it is, right? It's an educated guess. We have more information, but we never have all of the information. So trying to catch it at the bottom is often not possible. What you should be doing, in my opinion, is you should be looking for good opportunities, okay? And at any of these levels in this range, these are great buying opportunities, okay? Because look at where we just were and look at where we are now, okay? We're significantly down. Everything is down 50%, 60%. Some things are down 90%. So I've seen some tokens down 90% from where they were at. So don't get stressed or obsessed over trying to catch the bottom, or you've got to get the best possible rate. Just have a long-term strategy, be patient, and make sure that when these kind of opportunities do come up, that you take advantage of them. Jenny says, should we hold on to our little holdings of Bitcoin or buy good alts? Jenny, that's ultimately up to you. I would say, look at the values of the specific tokens that you're interested in and where they're actually at. So I can give just two examples that I was looking at earlier. One of my favorite projects and something I'm heavily invested in myself right now is ETHLend, okay? And ETHLend is way down. Okay, ETHLend hit 40 cents at one point. I think it was 40, almost 44 cents, right? And it just hit a low today of 5 cents. Okay, so that is a significant retracement. But if you look at that versus OMG, which is another big project of mine, it's only about 2x down, 2 times down from its all-time high level. Okay, so if OMG returns to its all-time high, then I'm going to get 2 times my return on investment from today. But if I put money into Lend and it goes back to its all-time high, I'm going to get 8 times return on investment than the money I put in today. So you can look at what you are interested in investing in and just kind of compare like what's down more and what has had a more drastic retracement, and then maybe you can possibly get a better return investing in those specific tokens over Bitcoin or Ethereum. With that said, I think Bitcoin and Ethereum, of course, are the safer, longer-term bets in this market compared to many of the altcoin projects out there. We just ultimately don't know, right? There's a lot of new technology. We can't have any absolute certainty that any of these specific projects are going to still be around for sure. But personally, I feel very, very comfortable and confident that Bitcoin and Ethereum and Litecoin, maybe a few others, are not going anywhere anytime soon and will continue to rise in value. So that's also something to think about. Steve, you're putting my thoughts into words, but much more eloquently. Thanks, Steve. Thank you very much. Brock, yes, when everyone's panicking and stressed, we're celebrating and making rational decisions. That is right, and that's how you win in these markets long term, okay? Jamie, UK here. The system seems a little more choked over there in the US. I'm not sure by choke, do you mean more regulated, or maybe if you can clarify that a little bit, Jamie. If you're still watching, I'll wait for your comment. You're back. Yep. Oh, you're back. It's working now. You are back. Yep. All good. Okay. Thanks for all those comments. No more. Yes. Comments are covering my face. We'll get rid of some of those. Okay. Josh says, "What do you consider non-shitcoins?" And this is a funny one because, you know, this varies a lot. You'll see a lot of tribalism in crypto, and a lot of people that you know, even like Bitcoin maximalists, as they're called, people that believe only Bitcoin is good and everything else is garbage. Those people are starting to not really be as vocal anymore, since Ethereum has had so much success, so much growth, and there's so many different applications you know, being developed on top of the Ethereum platform. Those people aren't as vocal anymore. But personally, what I would say is a shitcoin, in my opinion, is something that has nothing backing it. And what I mean by that is there's no actual technology. They haven't created something. They don't have a real like solid team or foundation, and it's pretty much just something that's being pumped. Something without a lot of depth to it, if you will. The idea is that everything that I personally invest in is something that I'm investing in because I believe it's going to succeed long term. Now, of course, not everything that I invest in is going to succeed long term. This is new, very speculative technology. So we're very early to the game. We're all taking advantage of these amazing early opportunities that we have, but that means some of the projects that we believe in, some of the things we support, will fail. Okay, it's just par for the course. But I am investing based on technology and based on the belief in the team, the product, all those different kind of things. So for me, a shitcoin would be something that's lacking that, and you see a lot of different coins being pumped. Or, you know, just getting a lot of hype, and there's not a lot of foundation to them. There's not a lot backing it. So I would say just be very aware of when you're investing to make sure that you really understand who's behind the project, what they've actually done, what they've accomplished so far, all that kind of good stuff. Okay, so very, very cool on that. Let's see. I'm still waiting for some fiat to transfer over. Do you think I will still have some bargains left to be picked up by the time I get it in my account? You know, I don't think we're heading straight back to the levels we were at, if that's what you're asking. You know, I do think we're going to see a bit of a consolidation period, some time trading at these low levels that we're at right now. So, you know, I think over the next couple of days, maybe going into next week, we should still see some really good deals at these levels, but you know, we can't know for certain. There's some news that it's going to come out that could change that I'm pretty confident about. You know, helping the markets to get back on the upward track. And again, I'll talk about that a little bit just in a few moments here. But let's see what else we got. Questions. Drop the link to the hearing. I actually need to find that link. Judith says double down. If you're asking me what does that mean, or what you know the strategy is, what I mean by double down is that, you know, I'm consistently using the process of dollar cost averaging, which, you know, if you've watched the beginner's course, I did talk about that in one of the videos. And basically, it's just, you know, I buy consistently when the market's up or when it's down, but I look for my biggest buying opportunities and when I put the most new money into the market. Now, I'm not talking about trading what's already in my portfolio. I'm talking about when I add new money into the markets are times like this when everybody's panicking, okay? And that's kind of what it means by doubling down. You know, when other people are panicking and they're trying to sell their crypto and maybe they're selling at a loss, I'm buying more. okay? Because I still fundamentally believe in crypto. Nothing has changed. It's getting better every single day. There's so many new projects coming out to be excited about. There's so much development in the space, and there's so many upsides to what we're going to see the rest of the year that from a fundamental level, nothing has changed. Now I basically just get an opportunity to buy things on sale. Jamie, yes, I meant regulated and taxed. Yes, Jamie, America has a lot of regulations. It's very over-regulated. It's a major pain in the ass. It's one of the many reasons why I no longer live in America and I live overseas now, but that's that's a whole other story in and of itself. So Jonah says, how do you protect profits without taking out the money into your bank account? I used to use Tether, but won't touch it now for obvious reasons. Jonah, there's not really a way. If you want to lock in your paper profits, you need to sell. Okay, you need to take an actual profit and move it back into cash. Like you said, you could use Tether, but I don't trust it either. I've never used it and I never will. Personally, I don't try to take profits in order to avoid situations like this. When I take profits, what I'm doing is I'm just basically closing out a position, and I will take those profits and hold it in either Bitcoin or Ethereum. Typically Ethereum these days, because I use it more frequently. Or at the time that I sell and take a profit, I'll move that into another undervalued cryptocurrency at that time and hold it, okay? So the idea is I'm thinking long-term. My strategy, as I've mentioned to you guys many times, is like I'm on a 3 to 5 year timeline, okay? I'm not thinking about, what's my crypto going to be worth in March. Of course, I am thinking about it. I want it to become more valuable. I want it to go up in value because that means that there is more interest and more people involved in this space, and ultimately it's going to lead to us having the kind of decentralized future that I'm hoping for, a future without top-down centralized control by the banks, by government, and all of that. That's why I got into this stuff, and that's why I'm still here, regardless of whether the markets go up or down or anything else. But with that said, that's why my strategy is that, okay? If you want to lock in profits, you've got to sell. So, and the profits, it's up to you. Where do you want those profits, right? How are you approaching this? Because for me, when I say I have a 3 to 5 year plan, what that means for me is that I think everything that I'm buying right now, or all of the value that I'm building right now is going to be worth so much more in the future. And also my hope in the future is that you won't need to sell, right? Cryptocurrency will be a part of our day-to-day life, and you can just spend it and use it and buy things and support your lifestyle without needing to move back to fiat. Or needing to use a standard bank account as we do today. So I believe that's our future. And so for those reasons, my only concern is getting my hands on as much cryptocurrency as I possibly can during these next few years. Okay, so hopefully that answers those questions. Ultimately, it's up to your strategy. The safest way is probably exchanges that allow you to sell into fiat and to hold your fiat there. But like you said, there's a lot of reasons why we can't really trust Tether right now. And, I've never used it, and I've recommended to stay away from it for, all of the different speculative reasons that are out there about why they may not be what they say they are. All right. So, do you know when WePower hits an exchange? I do believe that they were already listing, or they were trying to list, if I remember correctly. Let's look at the recently added here. We've got some great new projects that are out there on the exchanges, and it's kind of getting lost in the shuffle here for obvious reasons. People aren't really paying attention to this, but we do have. We have D-Market was a project I was interested that has debuted. Oh, very low volume, though. That's interesting. I think it's Iungo. I don't really know how you pronounce that, but that's an interesting project. Zilla is a very interesting project. Jabril Network, another one. Polymath, lots of interesting projects here, but it does not look like WePower actually debuted on here yet. I thought I saw something about them coming to debut on the markets, but yeah, I'm not positive. I can look that up and we can find out. Let's see. But what do you want to hear from the SEC meeting in 30 minutes? Will this create a bit of a run? Okay, let's go ahead and talk about that. And I did read the prepared statements from both the SEC and the CFTC, and they were very much so positive. Okay, they were overall very positive. Of course, there were some hesitations on the parts of the regulatory agencies, and I think if we're honest, even though, like I said, I'm not the biggest fan of government and regulations, but if we're honest, we can say, especially with what we've seen with the B token ICO hack and the various different problems we've been witnessing. Dottie had some pretty major problems with their ICO as well. We've seen all that kind of stuff happen. So I think we can be honest with ourselves and say that there is a lot of room for the markets to improve and to be a little better regulated, if you will. Okay, so so you're going to see two testimonies today. And if you aren't familiar with this, let me see if I can pull this up. Let me just get a basic article up here. And let's see which ones we have. So we've got a CoinDesk article here, and there is a couple of things that are really interesting that I want to point out here, and there's a couple of really positive things that were said by both the SEC and CFTC chiefs, but particularly a lot of really positive things came from Christopher Giancarlo, which is the chairman of the Commodity Futures Trading Commission. Okay, now, if you guys aren't familiar with what this is, let me just read you this quick summary from CoinDesk so you can know what I'm talking about first. Now, it says, Congress is set to hold what may be the most consequential hearing in years on the subject of cryptocurrency, with the heads of the two main U.S. financial market regulators in the hot seat. J. Christopher Giancarlo, chairman of the Commodity Futures Trading Commission, and Jay Clayton, his counterpart at the Securities and Exchange Commission, will testify on Capitol Hill tomorrow. And this is actually happening in 30 minutes, okay? But it says, and the process of fielding questions from the Senate Banking Committee is likely to yield one or two notable moments, given recent developments in the space, including those involving the agencies themselves. In recent months, the two agencies have between them filed lawsuits against alleged scams, launched investigations, overseen the launch of Bitcoin futures, issued warnings to investors, and perhaps more broadly come to terms with a rapidly evolving environment that has, in the words of their leaders, tested the limits of their reach. Ahead of the hearing, copies of both Clayton's and Giancarlo's testimony have been released. While largely an overview of their respective agencies' work to date, both leaders suggested that they would support, in some way, new avenues of regulation that could lead to an expansion of oversight by the U.S. government into the cryptocurrency market. Yet, such an undertaking would, in their view, require an act of Congress as well as close involvement with the relevant agencies. Clayton commented in his written remarks that he is open to working with U.S. lawmakers in addition to state regulators on the question of new rules for trading sites. Okay, so that's pretty much what's going on. They're giving a hearing, and they're basically going to meet and take questions from lawmakers and other relevant parties, including the press. And just different people that will be attending this event. And so there's a couple of things I want to point out, because I did read these prepared statements, and I think, let me see if I've got them pulled up still here in front of me. I believe they're still here. Yeah, so let's go ahead and read the few key points for Jay Clayton, who is the chairman of the U.S. Securities and Exchange Commission, the SEC, and he has some interesting things to say. And I don't want to really read his entire presentation or his entire speech, but I do want to go ahead and recognize a few important things he said. And let's just read really quickly his conclusion, okay? His conclusion of this, he wrote, "Through the years, technological innovations have improved our markets, including through increased competition, lower barriers to entry, and decreased costs for market participants. Distributed ledger and other emerging technologies have the potential to further influence and improve the capital markets and the financial services industry. Businesses, especially smaller businesses without efficient access to traditional capital markets, can be aided by financial technology in raising capital to establish and finance their operations, thereby allowing them to be more competitive both domestically and globally. And these technological innovations can provide investors with new opportunities to offer support and capital to novel concepts and ideas. History, both in the United States and abroad, has proven time and again that these opportunities flourish best when pursued in harmony with our federal securities laws. These laws reflect our mission to protect investors, maintain fair, orderly, and efficient markets, and facilitate capital formation. Being faithful to each part of our mission, not in isolation, but collectively, has served us well. Said simply, we should embrace the pursuit of technological advancement as well as new and innovative techniques for capital raising, but not at the expense of the principles undermining our well-founded and proven approach to protecting investors and markets." So this is basically his conclusion to this. And throughout this, he has a couple other important points. And he does talk a fair bit about the ICOs and how they work. And there's a couple of particular insights here that I took away. And let me find the right one. Specifically stating that, the problem with a lot of these ICOs is that they are marketing themselves as a security, but they're not actually registering as a security. And let me see if I can find the right part here. Yeah, it's hard to read this while I'm on here, but I think, oh, here we go. So I think, I also have cautioned market participants against promoting or touting the offer and sale of coins without first determining whether the securities laws apply to those actions. Engaging in the business of selling securities generally requires a license, and experience shows that excessive touting in thinly traded and volatile markets can be an indicator of scalping, pump and dump, and other manipulations and frauds. This is not the exact part I wanted to read. But anyways, what he talked about specifically is that people cannot or should not market the secondary or like the exchange aspect of it. And so this is why you'll probably see a lot of ICOs now. They're not actually talking about when they're going to debut on exchanges or anything like that, because marketing your token, if it is a utility token, as you state it is, then you can't just basically like tout the fact that you're going to make a return on your investment, because that is actually selling a security. And if you're going to sell a security, then you must have that security registered and go through all of the proper channels that the SEC has in place. Okay. Now, other than that, the part that was really, really interesting for me was actually the second presentation that I believe it's going to go in order. And the second one is going to be, I should say, because it's about to happen in roughly 20-ish minutes. This is from Christopher Giancarlo, who is the chairman of the Commodities Futures Trading Commission, okay? And this part is really, really cool because he said some very interesting things, and he seems to be much more of a person that is excited about the potential and actually sees the great potential in how this can help make regulators' jobs easier and better and smoother, and how we can actually start to hold people accountable for their what they're doing in the markets. Okay, so let's read what he says. Okay, and I'm actually going to go ahead and read. Where's the right part that I want? I'm going to scroll down, okay? And I'm just going to read the potential benefits section, okay? He does talk about what the CFTC is, what futures are, how commodities are regulated, why the Bitcoin futures were put into place, and all of the steps that were taken to ensure that the Bitcoin futures were, run properly and all that kind of stuff. But yeah, so after he goes through that, he goes into the potential benefits of the blockchain. And these are the parts that when I read this is very exciting. And I think you'll see why I believe today is actually going to be very, very positive news, and why, this could potentially even turn the markets around in and of itself very, very quickly. So let's read through this. So he says, I have spoken publicly about the potential benefits of the technology underlying Bitcoin, namely blockchain or distributed ledger technology, DLT. Okay? Distributed ledgers in various open system or private network applications have the potential to enhance economic efficiency, mitigate centralized systemic risk, defend against fraudulent activity, and improve data quality and governance. DLT is likely to have a broad and lasting impact on global financial markets in payments, banking, security settlement, title recording, cybersecurity, and trade reporting and analysis. When tied to virtual currencies, this technology aims to serve as a new store of value, facilitate secure payments, enable asset transfers, and power new applications. Additionally, DLT will likely develop hand-in-hand with new smart contracts that can value themselves in real time, report themselves to data repositories, automatically calculate and perform margin payments, and even terminate themselves in the event of counterparty default. DLT may enable financial market participants to manage the significant operational, transactional, and capital complexities brought about by the many mandates, regulations, and capital requirements promulgated by regulators here and abroad in the wake of the financial crisis. In fact, one study estimates that DLT could eventually allow financial institutions to save as much as $20 billion in infrastructure and operational costs each year. Another study reportedly estimates that blockchain could cut trading settlement costs by a third, or $16 billion a year, and cut capital requirements by $120 billion. Moving from systems of record at the level of a firm to an authoritative system of record at the level of a market is an enormous opportunity to improve existing market infrastructure. Outside of the financial services industry, many use cases for DLT are being positive, from posited from international trade to charitable endeavors and social services. International agriculture commodities merchant Louis Dreyfus and a group of financing banks have just completed the first agricultural deal using distributed ledger technology for the sale of 60,000 tons of U.S. soybeans to China. Other DLT use cases include legal records management, inventory control and logistics, charitable donation tracking and confirmation, voting security, and human refugee identification and relocation. Yet, while DLT promises enormous benefits to commercial firms and charities, it also promises assistance to financial market regulations in meeting their mission to oversee healthy markets and mitigate financial risk. And now, I want to highlight this part. This in particular was very refreshing to read and was one of the parts that got me very excited about this particular man's opinion or what he's actually presenting to the public today. Now, check this out. He says, let me get that screen back up. Check it out. He says, what a difference it would have made on the eve of the financial crisis in 2008 if regulators had access to the real-time trading ledgers of large Wall Street banks, rather than trying to assemble piecemeal data to recreate complex individual trading portfolios. I have previously speculated that if regulators in 2008 could have viewed a real-time distributed ledger or a series of aggregated ledgers across asset classes and perhaps been able to utilize modern cognitive computing capabilities, they may have been able to recognize anomalies in market-wide trading activity and diverging counterparty exposures, indicating a heightened risk of bank failure. Such transparency may not by itself have saved Lehman Brothers from bankruptcy, but it certainly would have allowed for far prompter, better informed, and more calibrated regulatory intervention instead of the disorganized response that unfortunately ensued. Okay, pretty amazing stuff there, guys. Pretty amazing stuff. This guy is just straight up saying that, distributed ledger technology is the future, as we all know, but he is specifically stating how it can make regulation easier and it can actually make for a better situation whereby, we don't potentially have the catastrophic issues that we've seen in the markets in the past and the catastrophic fraud and all that. Now, I do want to just read and close out with his policy considerations and his conclusion here, because this is important and this is the stuff we're waiting for. So this is what his policy considerations, or basically how he recommends this industry should be regulated, okay? And this is obviously what we're all waiting for. So he says, 2 decades ago, as the internet was entering a phase of rapid growth and expansion, a Republican Congress and the Clinton administration established a set of enlightened foundational principles. The internet was to progress through human social interaction, voluntary contractual relations, and free markets. And governments and regulators were to act in a thoughtful manner, not to harm the internet's continuing evolution. The simple approach is well recognized as the enlightened regulatory underpinning of the internet that brought about such profound changes to human society. During the almost 20 years of do no harm regulation, a massive amount of investment was made in the internet's infrastructure. It yielded a rapid expansion in access that supported swift deployment and mass adoption of internet-based technologies. Internet-based innovations have revolutionized nearly every aspect of American life, from telecommunications to commerce, transportation, and research and development. This robust internet economy has created jobs, increased productivity, and fostered innovation and consumer choice. Do no harm was unquestionably the right approach to development of the internet. Similarly, I believe that do no harm is the right overarching approach for distributed ledger technology. Virtual currencies, however, likely require more attentive regulatory oversight in key areas, especially to the extent that retail investors are attracted to this space. SEC Chairman Clayton and I recently stated in a joint op-ed that our task as market regulators is to set and enforce rules that foster innovation while promoting market integrity and confidence. In recent months, we have seen a wide range of market participants, including retail investors seeking to invest in DLT initiatives, including through cryptocurrencies and so-called ICOs, initial coin offerings. Experience tells us that while some market participants may make fortunes, the risks to all investors are high. Caution is merited. A key issue before market regulators is whether our historic approach to the regulation of currency transactions is appropriate for the cryptocurrency market. Check cashing and money transmission services that operate in the US are primarily state regulated. Many of the internet-based cryptocurrency trading platforms have registered as payment services and are not subject to direct oversight of the SEC or the CFTC. We would support policy efforts to revisit these frameworks and ensure they are effective and efficient for the digital era. As the Senate Banking Committee, the Senate Agricultural Committee, and other congressional policymakers consider the current state of regulatory oversight of cash or spot transactions in virtual currencies and trading platforms, consideration should be given to shortcomings of the current approach of state-by-state money transmitter licensure that leaves gaps in protection for virtual currency traders and investors. Any proposed federal regulation of virtual currency platforms should be carefully tailored to the risks posed by relevant trading activity and enhancing efforts to prosecute fraud and manipulation. Appropriate federal oversight may include data reporting, capital requirements, cybersecurity standards, measures to prevent fraud and price manipulation, and anti-money laundering and know your customer protections. Overall, a rationalized federal framework may be more effective and efficient in ensuring the integrity of the underlying market. Okay, and here's his conclusion. You know, I'm reading a lot more of his, but it's very, very positive message. Actually, it's great to hear this. You know, people are thinking, oh, it's all doom and gloom, and you know, they're just going to come on here and make everything illegal or go crazy or whatever. It's actually quite positive statements here. But here's his conclusion, and it's pretty great. You know, it says, we are entering a new digital era in world financial markets. As we saw with the development of the internet, we cannot put the technology genie back in the bottle. Virtual currencies mark a paradigm shift in how we think about payments, traditional financial processes, and engaging in economic activity. Ignoring these developments will not make them go away, nor is it a responsible regulatory response. The evolution of these assets, their volatility, and the interest they attract from a rising global millennial population demands serious examination. With the proper balance of sound policy, regulatory oversight, and private sector innovation, new technologies will allow American markets to evolve in responsible ways and continue to grow our economy and increase prosperity. This hearing is an important part of finding that balance. Thank you for inviting me to participate. And that's where he signs off, okay? So that's the kind of stuff we're going to hear today. That's basically a brief summary. I mean, overall, it's great stuff. You know, there seems to be, hopefully this is, you know, the path forward that people take, the do no harm policy that came around from the internet itself. And, you know, we're going to see the value actually, or like the good parts of these hearings actually usually result from the questions that are asked by members of Congress and the press and other people that are attending the meetings. So we're actually going to have to wait and see, and it's starting in 13 minutes. So I will do 13 more minutes of questions, and then I'm going to get off here and actually check out this hearing, because personally, I think, you know, if the message is what we are seeing here, and you know, how it is being presented, then this could actually be a very positive thing for the market. Because one thing that we do know is that there is a lot of uncertainty, okay? And I just got back from a great marketing mastermind here in Phuket over the weekend, and one of the speakers that was there said, I'm trying to remember who it was. What they said, confused people don't buy. Confused people don't buy, okay? And so there's a lot of people in these markets right now that are very confused about the legality of the markets, right? Are these tokens, are these ICOs legal? Are they illegal? Is trading cryptocurrency legal? There's a lot of uncertainty in the market. And for you and I, the early pioneers of markets, we can accept a certain level of being uncomfortable or being uncertain and not really knowing what's going on in the markets. But for the average retail investor, the average everyday person that would look for a potential investment to improve their lifestyle, to improve their situation, to improve their future, they're not going to buy if they're confused. Okay, so I think if we can get to a place where there is some actual clarity in the markets about how they're going to move forward, of where this is all going, then that's actually going to be amazing. And, what America does, typically the rest of the world will follow. Pretty much everyone's just kind of waiting to see right now, what is the SEC going to do? What is the American government's response going to be moving forward? And it's really pretty amazing that we haven't seen too much come out yet, but I think we're reaching that level where it's unavoidable now. They have to come out and approach this. Cryptocurrencies are not going anywhere. This is only going to get bigger and bigger, and more of a part of the economy and the lives of Americans. So this is the time to do it, and I think we'll possibly see a very, very positive upswing if this goes the way it seems like it's going to go, based off of the prepared testimony from the two speakers that we'll be hearing from today. So, yeah, I got about 10 more minutes if anybody else wants to ask any questions. I think this has been a pretty awesome live stream. Hopefully you guys have gotten a chance to understand, if you're new and this is your first time experiencing this kind of crazy correction, then yeah, it happens. So you just gotta be ready for it, because this will happen. And this is the biggest correction we've seen in a long time. A crash is appropriate words, appropriate verbiage, but again, there's nothing to panic about. So I don't know. I don't see any other questions coming in. Anybody else got questions? Throw them on the screen if you've got them, because I can answer a few more. And like I said, in 9 minutes, this stream is going live. And let me see if I can find it. Do a Google search here. Stream. Know that they stream all these videos online. Here we go. There's also going to be another stream next week. I guess I can't actually access the SEC website unless I'm on a US-based IP address, which is pretty funny, eh? It's pretty hilarious, but I'll see that later. I'll go ahead and post in the comments what that screen is. Kurt, with the sell-off, where did all the money go? Now, here's an important thing to understand about market cap value. That doesn't mean all of the money in the market cap is actually in the market cap. A market cap is just a summary of the current price that people are paying for a cryptocurrency multiplied by the circulating supply. Okay, that doesn't mean, so when there's a $850 billion market cap, that doesn't mean people have actually put $850 billion worth of US dollars into the market, okay? That's not accurate. In fact, an $850 billion market cap may mean there's only like 20 or $30 billion that have actually been moved from fiat, US dollars, euros, yen, whatever, into the cryptocurrency market. But the market cap is being determined by what people are willing to pay at that moment, multiplied by how many how many the circulating supply is of that specific asset. So it's kind of, you got to think about it that way. It doesn't necessarily mean that a lot of money has actually left. It doesn't necessarily mean that a lot of money has like physical fiat money or dollars or whatever have moved out of the market and somewhere else. That's not necessarily the case. It just means people at this moment are willing to pay less for Bitcoin. People are selling, and that kind of happens. So where did all the money go? It could have gone a lot of places, and also it doesn't mean it all left. Okay, that's an important thing to remember as well. What are your thoughts on the tech behind Ripple and Verge? Is it really revolutionary or smoke and mirrors? What are the key ideas? That's a pretty long and detailed. I can't really answer that in about 6 minutes here. But the Verge, for me, does not. I mean, it doesn't appear to. They don't appear to be producing much from, what I've seen. They seem to keep hit or missing targets that they set for their team, and it seems to kind of be like one of those hyped up projects. Ripple, the tech is pretty good, but the token itself is not essential for any reason. The Ripple network is running well, and they have very fast transactions, and it's actually very fast and cheap to use the token, but the Ripple network does not require the use of the token. So that's something that as an investor, I always look into what are the actual token economics, what's the benefit of the token, and what's going to keep that token in use. Because long term, if you're using or betting on the value of the token, then you're going to want to see, how it's used in the economy and how that economy is going to grow over time. Elmore says, can you please post the link of this hearing in the Telegram and Facebook group for those people that cannot see it live, please? I'm sure it'll be on YouTube after. I'll look for it and see how I can find that. And yeah, I'll post it around. It should definitely be available. And that will be something I post. And yeah, I think definitely it's something that's worth watching. I typically, again, like I said, not a fan of government, and certainly wouldn't find myself watching government agencies debate whatever issues typically. But this is a very important meeting. It's a very important time to get some clarity and some understanding in the markets, and on where regulations are headed, and how this kind of stuff is going to be treated. Okay, because I think there's a lot of money that's going to be coming in, and even more money that's waiting to come in. But they need, especially these financial institutions, the big ones, get Goldman Sachs, JP Morgan, all these guys that can, easily bring hundreds of billions of dollars into the market cap very, very quickly. These guys need the regulation in place because they need to understand what the risks are for them, and they need to be able to mitigate against those risks so that their shareholders are protected, and so that they don't get caught up in a situation down the line where they lose a lot of people a lot of money. Okay, so until there's more clarity in these markets, until there's more certainty about how these regulations are going to come down, you're always going to have this hesitation. Okay. Elmore, ICO, Ozcoin thoughts. I would do a lot of research on that one, and I would personally never even think about investing in it for many, many reasons. It's not one that passes my checklist test. So I will not be investing in the Ozcoin ICO, but there's a lot of different stuff you can find online about that specific project. And, a lot of people have a lot of questions about it, and it's not for me. What other questions we got, guys? I think we got a few more. Trying to see if I can actually get this stream going. with an incognito window. Nope, access denied. I guess I really can't access this U.S. Senate server. Very strange. Let me see if there's any other way to stream it here. Keep asking your questions. I'll get on there and answer them for you as soon as I can. Just trying to find this committee hearing. See if anybody's streaming it on YouTube. Help us out here. I don't see it streaming online. You gotta. I guess I can connect on a VPN connection here, and then we can see. All right, let's see what other questions we have here. What's your take on the Rentberry and WePower ICOs? Those are both solid projects that I found interesting. Rentberry, I believe, is still open, still available to invest in. And yeah, I did look at that, and I think it's a good one. I think WePower is good as well. Obviously, the ICO was pretty difficult to get into. They had a very low individual contribution limit, max contribution limit, and I think that's going to become more and more common with these big ICOs, unfortunately. You're going to have to get into the pre-sales and, get in early, or, that's, I think, something that we need to focus on more. If you want to get into ICOs, you're going to need to get into the pre-sales probably, because they're just starting to sell out very quick. All right, so very, very cool. I think there is a good amount of questions that have been answered here today. I'm going to try to see if I can get onto this hearing here and check it out so I can report back to you guys on what it's all about and how it goes. So I can answer maybe one more question. And yeah, maybe I'll just answer a few more if I can. I'm just trying to get in on a proxy server here and see if I can watch this. Let's see. Yeah, I don't actually have a VPN hooked up on this computer that I'm using right now, so I can. Yep, not working at the moment, so I do have to get off here. And yeah, Steve, I've got the link. The problem is that it doesn't work if you're not in America, which is pretty funny. But you just basically get, at least where I'm at in Thailand here, I just keep getting access denied. And I think that's, I've seen that before in other US-based websites for the government websites. It's pretty funny that they just kind of like ban access to other countries to their websites. But I guess there's probably a lot of hacking attempts and DDoS attempts and all that kind of stuff on their websites. So it makes sense. You got it on live, Steve? Is it working? Let me know if it's live. All right. Very cool. So, guys, I want to thank you for watching this stream. I know it's been a little bit. I wanted to basically, I was not planning on making a live stream today, but I saw a lot of panic, a lot of concern, a lot of people acting very irrational, and it's understandable. These kind of situations can be quite scary, quite hard to understand what's going on, or to get a feel for what is happening. And I just wanted to come on here and give you guys a little reassurance. I've been here. I've seen this happen before. It seems like it's the end of the world when these kind of things happen. And again, I made the title of that as a kind of play on the joke. I believe that's that REM song. Yeah. Steve, it says live soon. I'm on a VPN from Thailand as well. Maybe I just connect on my VPN and then I can actually watch it. That's what I need to do. So I'll get on my VPN. Let me turn on my VPN here, and then I'll go ahead and we'll give it a little watch and be able to see what it's all about, and that'll be good for me. But with that said, I will jump off here and I will go ahead and give that a watch here. And everybody that's watching that in Thailand or wherever you're at, excuse me, enjoy that. And as enjoying as a hearing can be, it should provide everyone with some good information and some good things to focus on and to take away with them for the time moving forward. And I want to thank you again for watching the stream. Thank you, Derrick. Last one, Smart Mesh and Right Mesh seems like the same products. I have not looked at Right Mesh yet, but Smart Mesh is a project that I'm very interested in. There are several other projects that are working on smart mesh networks or mesh networks, I should say, and working on just decentralized internet and mobile communications networks. And I think those are going to be very important moving forward in the future, as we've seen, authoritarian, heavy-handed governments such as China and other countries move further and further towards trying to crack down against the internet. And the point of having these kind of decentralized systems is to prevent that from happening and to remove those centralized points of control that we've all kind of suffered under for so long. So I think if the projects are similar, that's fine. There's room for multiple competitors in every market. I would say just look at what you think is interesting and check out what you think. So Dean's saying live SEC stream has just started. Anthony's saying seems to be starting now. Steve starting now. So with that said, peace. I'm out of here. I'm gonna go watch the stream, and you guys enjoy that. I will do another live stream soon. And we'll talk to each other again very soon. Have a good night, good day, wherever you are in the world, and I will see you later. Peace.